Livin Investasi? Klik banner daftar sekarang juga ya. Karena kamu belum punya rekeningnya, klik lagi, buka rekening investasi. Baca syarat dan ketentuan sebelum klik setuju, lengkapi dan verifikasi data diri kamu, isi risk profile questionnaire dengan jawaban yang kamu banget deh pokoknya. Pilih rekening sumber dana yang akan digunakan buat bertransaksi. Cek lagi data yang udah diisi. Sebelum lanjut, ganti posisi dulu, biar makin PW. Masukkan PIN, cukup pakai jempol. Dan tada! Registrasi selesai dan akan segera diproses. Lanjutin aja leha-lehanya. Ini era baru investasi. Livin Investasi. Do it smart, do it now. Tutorial beli reksadana di Livin sambil ngurus rumah. Nyalakan vakum. Maju, maju, maju. Sekarang mundur. Mundur, mundur, mundur. Sambil dibuka ya aplikasi Livin by Mandirinya. Lalu klik fitur baru, Livin Investasi. Setelah itu, jika kamu melihat ada monstera yang kering, segera disiram ya. Lalu baru kamu lanjut klik beli produk reksadana di layar investasi aplikasi Livin by Mandiri. Pilih produk yang sesuai dengan yang kamu inginkan. Bisa langsung bandingin sampai 3 jenis produk berbeda. Baca prospektus dan informasi ringkas produk sebelum cus klik beli. Baca syarat dan ketentuan sebelum klik saya setuju. Masukin nominal yang mau dibeli, terus masukin PIN deh. Nah, sekarang rumah udah beres dan kamu juga udah punya reksadana deh. Ini era baru investasi. Livin Investasi. Do it smart, do it now. Tutorial atur investasi rutin reksadana di Livin Investasi sambil nonton drakor. Pertama, pilih-pilih dulu drakor yang mau ditonton. Sambil nunggu drakor yang mulai, coba ambil HP-nya deh. Lalu buka aplikasi Livin by Mandiri dan klik fitur baru investasi. Masuk ke portfolio dan klik tombol investasi bulanan. Input nominal, pilih tanggal auto debit dan durasi investasinya. Terus masukin PIN deh. Nah, rencana investasi bulananmu udah selesai. Loh, nonton drakor kok sampai nangis gitu? Ini era baru investasi. Livin Investasi. Do it smart, do it now. Tutorial jual dan alihkan reksadana pakai Livin sambil yoga. Tarik nafas panjang. Pelan-pelan buang. Pakai tangan satunya, buka HP kamu, lalu klik Livin by Mandiri. Dan pilih fitur baru, Livin Investasi. Klik detail portfolio, di setiap produk yang kamu miliki, kamu punya pilihan untuk jual atau kamu juga bisa mengalihkan ke produk lainnya. Kalau mau dijual, klik tombol jual. Baca syarat dan ketentuan dan klik saya setuju. Tinggal masukkan jumlah unit yang mau dijual atau dialihkan, terus klik tombol lanjutkan. Habis itu, masukin PIN deh. Loh kok malah rebahan? Ayo lanjutin workoutnya. Proses pengalihan atau penjualan reksadana kamu pasti sudah selesai. Ini era baru investasi. Livin Investasi. Do it smart, do it now. Tutorial registrasi reksadana pakai Livin sambil leha-leha. Pertama, buka aplikasi Livin by Mandiri. Klik ikon Livin Investasi. Klik banner daftar sekarang juga ya. Karena kamu belum punya rekeningnya, klik lagi, buka rekening investasi. Baca syarat dan ketentuan sebelum klik setuju, lengkapi dan verifikasi data diri kamu, isi risk profile questionnaire dengan jawaban yang kamu banget deh pokoknya. Pilih rekening sumber dana yang akan digunakan buat bertransaksi. Cek lagi data yang udah diisi. Sebelum lanjut, ganti posisi dulu, biar makin PW. Masukkan PIN, cukup pakai jempol. Dan tada! Registrasi selesai dan akan segera diproses. Lanjutin aja leha-lehanya. Ini era baru investasi. Live in investasi. Do it smart, do it now. Tutorial beli reksadana di Live in sambil ngurus rumah. Nyalakan vakum. Maju, maju, maju. Sekarang mundur. Mundur, mundur, mundur. Sambil dibuka ya aplikasi Live in by Mandirinya. Lalu klik fitur baru, Live in Investasi. Setelah itu, jika kamu melihat ada monster yang kering, segera disiram ya. Lalu baru kamu lanjut klik beli produk reksadana di layar investasi aplikasi Live in by Mandiri. Pilih produk yang sesuai dengan yang kamu inginkan. Bisa langsung bandingin sampai 3 jenis produk berbeda. Baca prospektus dan informasi ringkas produk sebelum cus klik beli. Baca syarat dan ketentuan sebelum klik saya setuju. Masukin nominal yang mau dibeli, terus masukin PIN deh. Nah, sekarang rumah udah beres dan kamu juga udah punya reksadana deh. Ini era baru investasi. Live in investasi. Do it smart, do it now.
Recording stopped.
Tutorial atur investasi rutin reksadana di Live Investasi sambil nonton drakor. Pertama, pilih-pilih dulu drakor yang mau ditonton. Sambil nunggu drakor yang mulai, coba ambil HP-nya deh. Lalu buka aplikasi Live in by Mandiri dan klik fitur baru investasi. Masuk ke portfolio dan klik tombol investasi bulanan. Input nominal, pilih tanggal auto debit dan durasi investasinya. Terus masukin PIN deh. Nah, rencana investasi bulananmu udah selesai. Loh, nonton drakor kok sampai nangis gitu? Ini era baru investasi. Live in investasi. Do it smart, do it now. Tutorial jual dan alihkan reksadana pakai Live in sambil yoga. Tarik nafas panjang. Pelan-pelan buang. Pakai tangan satunya, buka HP kamu, lalu klik Live in by Mandiri. Dan pilih fitur baru, Live in Investasi. Klik detail portfolio, di setiap produk yang kamu miliki, kamu punya pilihan untuk jual atau kamu juga bisa mengalihkan ke produk lainnya. Kalau mau dijual, klik tombol jual. Baca syarat dan ketentuan dan klik saya setuju. Tinggal masukkan jumlah unit yang mau dijual atau dialihkan, terus klik tombol lanjutkan. Habis itu, masukin PIN deh. Loh kok malah rebahan? Ayo lanjutin workoutnya. Proses pengalihan atau penjualan reksadana kamu pasti sudah selesai. Ini era baru investasi. Live in investasi. Do it smart, do it now. Tutorial registrasi reksadana pakai Live in sambil leha-leha. Pertama, buka aplikasi Live in by Mandiri. Klik ikon Live in Investasi. Klik banner daftar sekarang juga ya. Karena kamu belum punya rekeningnya, klik lagi, buka rekening investasi. Baca syarat dan ketentuan sebelum klik setuju. Lengkapi dan verifikasi data diri kamu. Isi risk profile questionnaire dengan jawaban yang kamu banget deh pokoknya. Pilih rekening sumber dana yang akan digunakan buat bertransaksi. Cek lagi data yang udah diisi. Sebelum lanjut, ganti posisi dulu, biar makin PW. Masukkan PIN, cukup pakai jempol. Dan tada! Registrasi selesai dan akan segera diproses. Lanjutin aja leha-lehanya. Ini era baru investasi. Live in investasi. Do it smart, do it now.
Disiarkan langsung dari Studio 606 Training Center Mandiri University. Kami persembahkan
10, 9, 8, 7, 6, 5, 4, 3, 2, 1.
Assalamualaikum warahmatullahi wabarakatuh. Selamat pagi dan salam sejahtera kepada seluruh nasabah utama dan nasabah setia Bank Mandiri dalam acara Mandiri Wealth Talk yang berjudul Picking the Right Investment in Uncertain Cycle. Perkenalkan, saya Astari Adityawati, Wealth Specialist and Advisory dari Bank Mandiri yang akan memandu Wealth Talk pada pagi hari ini. Apa kabarnya Bapak dan Ibu? Kami berharap Bapak dan Ibu dalam keadaan baik dan sehat. Pagi hari ini telah hadir narasumber kita, yaitu Bapak Tiasiri. Beliau merupakan Executive Director JP Morgan Asset Management Singapura. Sebelum memulai, kami juga ingin menginformasikan kepada Bapak dan Ibu yang ingin bertanya langsung kepada para narasumber terkait topik yang akan kita bahas hari ini. Akan ada sesi tanya jawab di akhir acara. Bapak dan Ibu juga dapat meninggalkan pertanyaan di kolom chat atau Q&A. Dan untuk memberikan feedback terkait acara Wealth Talk pada pagi hari ini, mohon bantuannya kepada Bapak dan Ibu untuk mengisi kolom survei yang telah kami share pada kolom chat. Sebelum masuk ke pemaparan narasumber, kita akan mendengarkan opening speech dari Ibu Katarina Melia Indasari, selaku Vice President Wealth Management Group Bank Mandiri. Kepada Ibu Melia, kami persilakan.
Terima kasih Bang Cari. Selamat pagi Bapak Ibu nasabah untuk dan Bank Mandiri. Pertama, saya mengucapkan terima kasih kepada Bapak Ibu sekalian dengan kehadiran Bapak Ibu pada acara sesi Wealth Talk dengan Bank Mandiri pada pagi hari ini. First of all, I would like to thank you to our guest speaker this morning, Tiasiri, Executive Director JP Morgan Asset Management Singapore. Thank you, Anis, for joining with us today. Please allow me to speak in bahasa, Anis. Oke, Bapak Ibu sekalian, tentunya kami menjadikan momen ini menjadi sesuatu yang berharga untuk Bapak Ibu sekalian. Kenapa? Karena kami melihat bahwa banyak hal yang perlu diperhatikan, terutama dalam melakukan investasi, khususnya untuk Bapak Ibu sekalian. Kalau kami lihat bahwa adanya fenomena terakhir akhir-akhir ini ya Bapak Ibu sekalian, dengan adanya inflasi di Amerika yang semakin mereda, meskipun pada bulan kemarin gitu ya itu sempat ada kenaikan sedikit dibandingkan dengan bulan-bulan sebelumnya. Namun tentu saja kondisi-kondisi tersebut perlu kita antisipasi dan perlu kita atur siasat atau strategi bagaimana nanti kita dalam berinvestasi ke depan Bapak Ibu sekalian, terutama tentunya investasi dalam tingkat global maupun impact-nya bagaimana dengan domestik yang ada di Indonesia. Tentu saja ini menjadi satu hal yang mudah-mudahan dapat menjadikan insight untuk Bapak Ibu sekalian bagaimana mengatur investasi Bapak Ibu sekalian, mengatur strategi, dan kemudian bagaimana kemudian Bapak Ibu sekalian melihat peluang offshore fund ke depannya. Nah, tentu saja kita memahami betul bahwa adanya diversifikasi itu menjadi hal yang mutlak dalam berinvestasi, dan tentu saja momen pagi ini, event pagi ini kami harapkan dapat menjadi momen atau event yang merupakan insightful untuk Bapak Ibu sekalian. Itu yang saya sampaikan, dan sekali lagi terima kasih dan selamat menikmati untuk Wealth Talk pagi ini Bapak Ibu sekalian. Saya kembalikan kepada Astari. Silakan Astari.
Terima kasih Bu Melia atas pembukaannya. Langsung saja saya panggilkan moderator kita pada pagi hari ini, yaitu Diaz Adritya Putra dari PT Mandiri Manajemen Investasi. Kepada Mas Diaz, kami persilahkan.
Baik, terima kasih banyak Bu Astari atas introduction-nya. Terima kasih juga kepada Ibu Melia dan juga rekan-rekan dari Wealth Management Bank Mandiri atas kesempatannya pagi hari ini. Selamat pagi Bapak Ibu sekalian, nasabah Bank Mandiri. Perkenalkan, saya Diaz dari Business Development and Product Management dari PT Mandiri Manajemen Investasi, akan menjadi moderator untuk acara hari ini. Dan saya ingin memberikan informasi juga bahwa acara hari ini akan dibawakan dalam bahasa Inggris ya Bapak Ibu ya. So today we have Mr. Anis Tiasiri for our speaker. A little background of who Mr. Anis is. He is the Executive Director of Southeast Asia Fund Sales for JP Morgan Asset Management Singapore. Hi Anis, how are you doing?
Hello, good morning.
How are you? I'm sure
I'm
you're
doing
doing
very well,
well.
thank you. How are you?
Thank you so much for your time. So I would like to give the next about 35 to 40 minutes to you to maybe have a more elaborate discussion on what's going on in the market right now and what are the opportunity going forward. So I'd like to give the stage to you. Thank you.
Great. Thank you very much for that, Diaz, and a very good morning to everybody who's dialing in on the call as well. Thank you very much for having me. Now, I noticed obviously the name of the presentation was trying to find the right investment opportunities in today's landscape. And I think what's interesting is that if we can sort of put up the slides on the screen for everybody to have a look, I think what was really interesting this year is obviously when we're looking at sort of the investment landscape for 2023, a couple of things I sort of want to sort of highlight before we get started into the presentation. Now, I picked this particular picture on purpose, primarily because this windy road that we find ourselves on in 2023, it feels a little bit like what we've experienced in the markets right now. As we reach every single corner, we don't really know what new surprises we're going to be encountering. We've obviously had quite a lot of noise in 2023, and the whole purpose of me speaking to you all today is to really look through that noise and try to understand exactly what's been happening this year and what are the opportunities that this causes and arises for us as we go into the later part of 2023 into 2024. So let's have a look at sort of like the next page, please, a bit of a year in review. Now, we started off the year, before we get into sort of like what's happened, let's rewind the clock back to December 2022, right? And if you ask myself, if you ask any of my colleagues, obviously we started off the year saying, you know what? We have sort of experienced the worst market drawdown that we've experienced in a very, very long time. Just for context, the US bond market in 2022 drew down in its worst drawdown in almost 50 years. So we have not experienced the kind of drawdowns we experienced in 2022 for a very, very long time. So that was the starting point. And I think going forward, a lot of people expected that, okay, the reason why the markets have performed so bad last year was because they're pricing in a recession in the US this year. That was the view we all came in. Also, inflation was super high. Also, China was just reopening. So a lot of these things led us to sort of have a couple of different sort of beliefs that will happen this year. Number one, we expected China to outperform the US in 2023. That obviously did not happen. We expected the recession to hit last month in the US, which did not happen. We also expected inflation to basically stay high for a material period of time. That obviously has come down quite a fair bit. So a lot of the things that many people in the street and in the industry had sort of expected to happen in 2023 just did not pan out. Now, fast forward, we are in 2023, and this is what we experienced in the first half of this year. Now, it won't be surprised if I read a couple of these things out to you, but for example, we saw obviously inflation being a little bit more stubborn than what we had expected, but that number is coming down. But what that basically means is that interest rates are high, and they're going to be higher for a lot longer than what people had expected. Nobody expected the Fed to keep hiking, but here we are. All that has led to a lot of uncertainty and a lot of turmoil and a lot of volatility, right, in the US. We lost 4 banks in the US this year, right? And we lost Credit Suisse in Switzerland, although the Credit Suisse example is a bit more specific to Credit Suisse and not so much related to the interest rate cycle. Now, with the loss of these US regional banks, a lot of this concern had led to obviously commercial real estate in the US and whether or not we're going to face another GFC. We got an annoying and yet sort of not necessarily that much newsworthy, but it caused a lot of volatility, debt ceiling standoff in American politics. We got China and the US being geopolitical issues yet again. And finally, obviously, in this wake of when is the recession coming, we actually have gone through a tech recession while waiting for a broader economic recession as well. And you've experienced that with all the layoffs we've seen across all these big tech firms in the US. So this has been a very, very tiring 2023. And I'm sure my colleagues in Mandiri also experienced this as well, because there's been so much noise this year. But let's go through the numbers. If we go to the next page, please. Now, this is a very, very busy chart. But what we've done here is we basically plotted out the stock market returns across all major markets going back 10 years. And I'll only ask you to focus on one column, which is the third column from the right, the one that says YTD, year to date, 2023. Amidst all the noise, amidst 4 banks in the US collapsing, amidst Credit Suisse meltdown, amidst US debt ceiling, amidst US potential housing crisis, amidst all the layoffs from Facebook and Google, etc., Taiwan is up 20%. The US is up 17%. Korea is up 15%. Everybody forgot that Europe existed, but Europe's also up 14%. And the big surprise this year is Japan had outperformed anybody's expectations with their corporate governance restructuring, and now they're up 13%. Whereas China, which was the #1 call for everybody in 2023, has significantly underperformed and actually drawn out a little bit as well, because obviously the reopening in China hasn't played out the way we had expected. But let's go even deeper into the numbers a little bit. And go to the next page, please. And let's just focus on the US, because that's obviously dominated the headlines this year. Now, a lot of people might have heard of the Super 7 in the US, or might have heard of the top 7 in the US. But these are the companies, I've listed them here: Apple, Microsoft, Amazon, Nvidia, Alphabet, which is Google, Meta, which is Facebook, and Tesla. These 7 stocks, right, on average went up 84% this year. And if you remove these top 7 stocks, and you remove the US regional banks from the S&P 500, and if you look at what's left, the S&P is only up this year by 4%. So the market has not moved this year. It's basically all those 7 stocks basically were responsible for almost 100% of the S&P 500 this year. We have never seen such a narrow rally going back to almost 50 years worth of data. Right? So just keep that in mind, that what we're seeing this year, this is not natural. This needs to basically mean revert and unwind. And as a result of this, these top 7 stocks now account for almost about 25% of the S&P 500. Right? So to just give a bit of context and in mind as to what's happened this year when it comes to the rally, this is not normal, and this is not driven by economic fundamentals at all, which is also a really interesting topic we can dive in a little bit later as well. But all of this is driven by 2 letters, AI. Right? A lot of AI-related names have propped up these stocks, and obviously that has led to this incredible surge in rally in an environment where everyone's trying to find the next big story and the next big thing. But the key here is, what happens to all the other like 400 plus stocks in the S&P 500 that did not rally as well? Right? We do expect this to broaden out, and hopefully that should provide some more and relatively more diversified opportunities for investors. Now, what do we think is going to happen in the US? Again, because that's going to inform a lot of how investors think about the market. And I think before we get into that, let's look a little bit at sort of what's been causing the US to be quite stubborn, actually, in terms of sort of like its recession outlook. Now, if we go to the next page, please. What's been good and bad? Good in the sense that people are employed, but bad in the sense that everybody's forecast for US recession was wrong this year, is attributed to one thing and one thing only, is that the US labor market is insanely strong. Right? If you look at the graph on the left, that is the unemployment rate in the US. This number goes back to 1984. We are at the lowest level of unemployment in the US in almost 40 years. Right? This is unheard of. This is basically full or negative unemployment at this rate if you adjust for the people who don't actually want to work in the economy. Why is that? If you look at the graph on the right, what you see there is actually, and if you look at that dotted black line there, that is the perfect line between enough people who want work and number of jobs available. What we're seeing right now is that there are more job openings than there are people able to do the jobs. So what happens if you are a restaurant owner and you want to make sure that your waiters and your kitchen staff and your cooks and your chefs don't leave? You make sure that you give them a raise. Or if somebody is trying to steal them from you by offering them more money, you have to match that as well. And this is why wage growth in the US has been so accelerated, because there's just not enough people available for work right now. A portion of this can be explained by the people who just left the workforce during COVID. A lot of people can also be explained by the people who retired during COVID. Obviously, the immigration policies from Trump carried over to Biden meant that a lot of undocumented workers in the US, about 2 to 3 million of them actually left the workforce. So there's a lot of people in the US who just completely exited the workforce in general. And right now, that's what's causing wages to keep growing in the US. One of the big components of inflation, by the way. And that's what's causing the US to be so resilient, right? And that's the key thing right now. This is the one thing that's driving the reason why the US is not yet in recession. Every other metric, whether you look at sort of corporate spending, you look at leverages, you look at all these other things, everything points to recession. The only one thing left is this. So this eventually for us needs to come down for two reasons. Number one, businesses are not spending any more money on investing. They're not borrowing any more money, and we'll go through the graphs in just a second. But the other thing is, don't forget that during COVID, the US basically gave free money to their people, free stimulus checks. Now that number is almost finished. They've been winding down their savings during sort of the COVID period to the point now where they actually start to dip in to their own personal savings. So we're seeing consumption trends change, we're seeing patterns change. So this number is going to have to come down, which means if we go to the next page, what you will see eventually is that inflation will also come down. Now, I mentioned when we were during peak COVID, inflation in the US touched 9%, right? That's way too high. Most central banks around the world are targeting a 2% level of inflation. And right now, it's come down quickly. But don't forget, interest rates have also gone up by almost 5.5% in one single year, which is mad, right? But we're still so high above the level that the Fed wants that we actually expect the Fed will hold interest rates at this level for a number of quarters. So we expect inflation this year to end at about 3 to 3.5, that yellow line there, right, which is still, again, quite far away from 2%. Now, if we go to the next page, and I think this is really what's going to cause a lot of the stumbling blocks and people starting to trip up a little bit in the economy, is that like I mentioned, interest rates are crazy high, right? We haven't seen interest rates move up this fast in a very, very long period of time. More than 5% in a year is a lot for the economy to digest, right? Which basically means that if you and I were running a company right now, we wanted to borrow money, right? Our funding cost went from 0 to 5 almost within a year. If my company wants to issue more bonds, to issue more funding, my cost of borrowing went from 1% to 6, 7% all of a sudden. So what am I going to do? I'm just not going to borrow. I'm going to slow down. I'm going to focus on cutting costs instead of expanding the business, which is why you're seeing all these layoffs come through. But again, don't forget the fact that I also mentioned that we had a number of banks in the US, especially US regional banks, go out of business this year. Now, what does that mean? That means that obviously for a lot of banks in the US, and again, we're also owned by JP Morgan Bank, right? We're seeing a lot more tightening coming. A lot of banks are getting very, very nervous. They're not lending out as much, or the standards at which they're lending out are much tighter, which means the credit quality, the credit worthiness must also be increased. So we're actually going to see a lot lower loan growth coming through the market this year. That, coupled with the fact that borrowing costs are so high, is naturally going to slow down the economy. So if you take all what I just said together, if we go to the next page, please, and summarize this, this is kind of how we're thinking about the world. And if you lay this out from a scenario perspective, right, we are of the view that the US will grow, but grow much below trend. What that basically means is the US will grow about 0 to 1% per year, which is lower than their long-term average. That's the green chart there. Inflation will drop below 3 at some point, but this is still higher than the 2% level that the Fed wants, which basically means interest rates will be on hold. They will stay high for an extended period of time. which basically means that everything's going to naturally slow down, right? So if you translate that into regular human speak, that basically means a soft landing, not a recession. Right? So if you go to the probability chart on the right, we've actually upgraded that number from 45 to 50%, which again, small number, but it's really just definitely getting more and more our base case going forward. We don't expect a massive recession, but we also don't expect a Goldilocks scenario where everything works out and the world is hunky-dory. We are aiming for a soft landing at this point in time, which basically means quality is going to be the number one priority for anybody right now. If you were to invest in a company, you want to make sure that they have a lot of cash, they don't have a lot of debt, right? Because at this particular point in time, what typically happens when we get into any period of economic slowdown, companies with the most debt struggle the most. Why? Because whenever they have to refinance their debt, their interest rates went from 0 to 5, right? All of a sudden. And number two, we want companies with a lot of cash because especially when we go into periods of recession, what we notice is that bigger companies get even bigger, stronger companies get even stronger, and there'll be a lot more M&A activity of really high quality companies buying not so high quality companies. And this is what we're keeping an eye out for right now. This is why you want to be focused on high quality companies when you go into an economic slowdown. Now, how do we view the investment opportunity landscape going forward? On the next page, please. And we're going to stay right here on page 9. So I wanted to maybe spend a little bit of time talking about two types of investing. Now, you have two different kinds of stocks. You have what we call cyclical stocks. These are the kinds of companies that do well when the economy is good and do bad when the economy slows down. These are places like banks, for example. Banks make a lot of money when the economy goes down because loan growth is growing, net interest margins are strong, so there's a lot more activity, a lot more volume. There's also places like real estate, construction, things like that. Obviously, when the economy is doing well, there's a lot more boom, there's a lot more sort of creation, there's a lot more sort of investment on that side. However, as we're seeing right now, because the economy is slowing down, because things are getting tighter, because people are unsure about the outlook of the economy, of the market, we're seeing banks lend less and less and less and less and less. And because when they do that, then their earnings come down. Number two, again, if we take real estate as another example, real estate prices in the US are so expensive right now that nobody can afford to buy a house. Mortgage rates are also so high, so even if you wanted to take out a mortgage, it'd be impossible to pay your mortgage in the US. So who's building right now? Nobody's building right now, except to rent, of course. So these are the types of companies that do well when the economy grows, but do bad when the economy slows. Then you have another type of company. These are what we call more structural companies. These are companies that invest in particular types of sectors that will do well regardless. A good example of this, the best one really is going to be, for example, like healthcare. If you think about it, if you need to buy medicine or you need to go see the doctor, you don't care what the GDP number is, right? You don't care how much unemployment is. If you're sick, you're sick. If you need medicine, you need medicine, right? You're not going to check the inflation level or you're not going to check the unemployment level before you go see your doctor. So this is an example of very sticky, very structural type of sectors that regardless of what happens in the economy, there will always be cash flow. But the tricky thing with these types of companies is that you have to identify the good ones. And this is where you have to do a lot of homework because not every healthcare company is built the same. Not every tech company is built the same. Not every consumable, sustainable company is built the same. So that's effectively what we're going to be focusing on now. So if we go to the next page, please. These are the 5 themes that we have chosen for our portfolio several years ago when we launched this product with Mandiri. Now, a couple of things I want to say about these themes. First of all, if you look at digital revolution, going green, healthcare innovation, these are very, very broad themes, right? And they're very broad on purpose. Why? Because what does it mean by healthcare innovation can change year on year. Last year, it could be all about sort of the invention of telehealth, where you don't have to physically go into the hospital right now, where you can have a virtual doctor. Whereas now, with AI adoption, that might mean, for example, we can use a lot more AI, generative AI technology to optimize our huge database for insurance to get the best pricing possible to increase our profit margin. It can also mean the creation of new drugs, new treatments. So these things, the interpretation of the way we play these themes can change over time. Another example is digital revolution, right? When we launched this strategy back in 2019, it was all about e-commerce and e-commerce penetration. Everybody downloading Lazada, everybody downloading Shopee, everybody downloading Alibaba, for example, and getting more and more penetration to e-commerce. That's not the case anymore. Then we shifted to semiconductors when there was a chip shortage last year. And now the theme is all about AI. So these themes are broad, but they're broad on purpose. The second thing about these themes is that they are built to last, which means they will be in the portfolio for a long period of time, because these themes, you can't take them back. These will be with us forever. You cannot change the way the world is going from a digital perspective. You cannot change the way we're going green, because that's a structural long-term investment for everybody in the world to make this world a better place. So if all these themes are broad and they're long on purpose, and the way we play them year on year will change as opportunities evolve, because what we're trying to do here is try to find underappreciated parts of each of these markets. Now, let me go through a couple of interesting ideas we have in the portfolio, just to give us a sense as to what we're thinking about right now. So if we go to the next page, please. And let's start with kind of the most obvious one. Now, there's a lot of words on this chart, and you guys can have a look at that on your own time. But what I wanted to say here is, obviously, AI blew up big this year, right? And a lot of people are asking, but AI has been with us for quite a long time now, right? If anybody has Gmail, whenever you try to type an email, Gmail will keep trying to fill in the end of your sentence. That's AI. Whenever you search for something in Google, they're always trying to do, there's a lot of AI in our daily lives already. What really made it a big main story for a lot of investors this year is obviously ChatGPT, right? The introduction of ChatGPT, the adoption of ChatGPT forced a lot of people to recognize that it was a trigger point that, hey guys, AI has reached a point now where it can sound like a human being, where it can think a little bit closer like a human being. It's not perfect, but the speed at which it adopts, the speed at which it changes is huge. Because if you look at the progression of where technology has gone, and again, this speaks to my earlier point about how we play certain themes changes, right? We went from PC, mobile phones, right? All our iPhones. We went to cloud. All of a sudden, then we moved to online advertising, right? And social media. Then we moved into memory, chips, DRAM, right? Semiconductors. And all of a sudden, all these things became overly supplied. And that's what happened last year in technology, which was technology had its own mini recession in 2022 and are just coming out of it right now. So we think we're in a position right now where valuations are not too overstretched for a lot of these companies, right? A lot of these companies have very, very strong balance sheets. You know how much cash all these guys have. And during COVID, all they've been doing is really obsessing and cutting on costs. So AI is just one of the sub-themes we have in the portfolio, but technology as a whole is an interesting area right now because they have just gone through their recession, right? They're not part of the broader economy, their own little thing. So there's some really interesting areas we have in the company right now. And I think it's just really interesting to see how we can sort of like look at the entire supply chain and find the best valuation opportunities. And again, AI really is here to stay. Now go to the next theme, I think it's quite interesting, is luxury goods. So a lot of people think luxury, they'll think places like Dior, they'll think places like LVMH. For example, we have L'Oreal in the portfolio at the moment. But these are some of the areas where we thought there's actually a couple of really interesting things that are happening in this particular market. First of all, if you look at the generation spent on luxury goods, it's actually shifted in a meaningful way. So if you look at that yellow bar there, right, Gen Y is becoming by far the most dominant part of the consumption spending pattern. Obviously, it makes sense because this is the generation where income is actually peaking right now. But what's interesting now is it's not just a combination of this, but it's also a combination of demographics. Now, when everyone thinks about luxury spend, everyone first thought is going, okay, it has to be China. But if you look at the graph on the right, during COVID, it was actually the Americans who've been buying the most luxury goods in the market right now. So why? I mean, we already touched a little bit upon it, like unemployment's super low, they've received a lot of cash handouts from the government. So it's natural that this thing comes out. Now, that's all well and good, but this is all the past, right? We want to look at the future. And obviously, we see China's opening up, China's recovery, right? It's taken a lot longer than what we had expected. There's a lot of psychological damage attributed to the zero COVID policy for 2 years. But China has accumulated more than $500 billion of household savings during COVID. This is at some point going to need to deploy. Now, you can obviously buy a Chinese company, but for us, from a risk perspective, we do think having sort of like luxury goods companies that are best of brand, that have exposure to China distribution, will do very, very well in this environment. So, for example, companies like L'Oreal are a great play. Now, on the next page, one of the things that is quite unfortunate, but it's going to be with us for quite some time, is this idea around geopolitics and sustainability, right? Now, the Russia-Ukraine war has forced a lot of people to look at their own supply chains and look at how much of a stress test case that was, effectively. And how a lot of people right now, especially large consumption economies like the US and China, are going to basically onshore a lot of this production, a lot of the supply chains, to basically make sure that they are completely independent, and viewing this as more of a national security aspect as well. So we have exposure to places that invest in onshoring, for example, Schneider Electric, which makes a lot of sort of like automation and energy management systems. We have Train Technologies, which is one of the world leaders in sort of more clean, sustainable, energy efficient sources. We have Keyence, which is one of the world's leaders in sensors and sort of factory automation, for example. And all these companies are building factories in the US. They're building factories in domestic places where you're going to get a lot of benefit from like let's say if we take the US CHIPS Act, where the government is spending federal dollars investing in all of this infrastructure, just to make sure that a lot of this is actually built up right and built for America, for example. So all this is going to be very, very important. And don't forget that as we move into the US election in 2024, this is going to be one of the #1 hot topics being debated. But how do we build our own national security when it comes to infrastructure and technology and semiconductors and chips and things like that? So one of the interesting things we're exploring in the portfolio. The next one is on healthcare. So what's interesting now, and I think you guys might have been seeing, sorry to go back one more, to page 14, please. So this is an interesting one. So healthcare has actually been an area where we've been trimming in the portfolio. However, we do like Novo Nordisk. Now, some of you may not have heard of Novo Nordisk, and if you haven't, then it's definitely a good thing. When you start hearing more and more about healthcare and pharmaceutical companies, that's not necessarily a great sign. Novo Nordisk was in the news last week, actually, about potentially overpassing LVMH as the largest European company in the world. Now, what is Novo? Novo is a pharmaceutical company. They're one of the world's largest and world's best, and they are the world leader in fighting obesity. Now, obesity is a large global epidemic, right? And I don't use that word lightly. So by the end of this decade, we would have basically 1 billion people around the world classified as obese. However, only 2% of people today are currently taking medication or treatments for obesity. And as time goes on, there's a very direct link, and everybody knows the story I'm about to tell, around sort of blood pressure issues, cardiovascular issues, health issues, heart issues, everything associated, and diabetes, for example, associated with obesity. So this has become a big burden for a lot of governments. It puts a lot of strain and pressure on the healthcare infrastructure of that government. So obesity is one of the key areas that a lot of governments around the world are tackling and trying to fight right now. Novo Nordisk made a breakthrough this year. They've invented a drug called Wegovy. Wegovy is a drug aimed and targeted towards obesity treatments, and it helps people reduce weight very, very effectively. With one injection, within a week, on average, you lose about 14% weight loss. Sorry, 17% weight loss, even higher. Right, so this has been a very, very effective drug. It is in market today. And obviously, a lot of people are thinking what I'm thinking right now, which is obesity is just one aspect. But this product has mass appeal to a lot of people around the world who want to have a more efficient way of sort of having weight loss. So this is an interesting area. We do have this in the portfolio. We've had it since before last week as well. And you can see on the sales and the projection of the sales, you can see on the graph on the right there, it is insane that we're seeing right now. So these are some of the themes we're exploring in the portfolio, right? So just have a bit of a recap. Within technology, obviously, there's a broadening out effect right now, but AI is really driving the charge there. Within sort of consumption, obviously, we see huge demand for luxury goods coming out, particularly new demographic, new generation. Obviously, we're waiting for the recovery in China. When it comes to sort of going green, obviously, this idea of onshoring, bringing production, manufacturing onshore is going to be a really, really big thing right now. And geopolitics is just going to keep reinforcing this theme going forward. And when it comes to healthcare, obviously, we're seeing this huge societal shift when it comes to sort of obesity treatments and how certain types of companies have had such breakthroughs to tap such a large and untreated market at the moment. So taking a look at our portfolio right now, how are we currently positioned? And before we do that, let's get into sort of page 17, please. And again, just keeping a little bit eye on time. I know I'm a little bit over. Before we build the portfolio, everything really just starts with the research, right? So this particular portfolio, the market is actually, we have about over 3,000 stocks, right, that we're allowed to invest in. However, we only invest in 30 to 50 stocks. To do that, to whittle this number down, you need a huge research platform, right? As of right now, we spend about $150 million a year just on equity research. We cover more than 2,500 stocks around the world, with about 5,000 individual companies that we meet every single year. So our universe of finding stocks is huge. So go to the next page, please. So what we try to do is really build all of this down into a very, very, very concentrated portfolio of the best ideas coming from all of our research analysts around the world. They all speak the same language. We all use the same system. So the portfolio managers, Raj and Caroline, can compare and contrast what are the best ideas across all these various different themes in the world. So we're relatively unconstrained. We have about 30 to 50 stocks in the portfolio. Right now, that number is about 49%. And we're an all-cap strategy, meaning we're not tied necessarily to one theme or one idea. We can move quite flexibly around the world. So if we go to page 20, please, on sort of the thematic drivers we see in the portfolio. Now, the traditional way of looking at a portfolio is on the right, but I'd rather focus on the left, which is kind of the themes we're trying to express in the portfolio right now. Now, a couple of things we've done in the portfolio over the last couple of months. Now, number one, we've increased our conviction in digital. Right? So you can see digital has actually been increasing and actually quite a large portion of the portfolio right now. We've added to some names like NVIDIA, where we've actually uplifted our expected return for this particular stock. We've added to names like Microsoft as well, who have a direct beneficiary to that AI theme. We have reduced some of the companies that have rallied a lot this year and taken profits from those companies like Workday, for example, that have seen this shift in this rotation. We've reduced healthcare, so you see the orange section there. That's come down a little bit. We've seen a lot of disappointing pipeline this year from a lot of companies, so we want to be a little bit more mindful and thoughtful about our healthcare exposure in the portfolio. In the going green bar, this is where we've actually seen a huge run up for a lot of companies, and actually we've been reducing some of the copper miners. We've been reducing some of the sort of EV supply chains, and we've completely sold out of Tesla as well because it's just too expensive right now. So we've been rebalancing the portfolio a little bit, and that's kind of like some of the ideas, and that references some of the thinking that we've had earlier in the portfolio just right now. Now, if we go 2 pages down, and this is sort of like some of the top 10 ideas that we have in our portfolio right now. Top 10 overweights and top 10 underweights. We have companies like Uber Technologies, obviously, which, as I mentioned, technology has just gone through their massive recession on their own, unrelated to the broader economy. And Uber has been one of those companies that have really sort of taken this idea of, I need to be more profitable, and they're running with it. Right? Share price this year is up 72% already. Now we have MasterCard, for example, huge margins, huge emerging market exposure. We have companies like Relics that are focused on data analytics. And in this environment where you have all this AI, you want that software to be able to patch in and get access to all that as well. And there's a number of different ideas here, for example, Cadence Systems, where they develop this software that you can write to program how to build a semiconductor chip, because you can't just build semiconductor, you have to design a semiconductor. And they sell the software to design semiconductor chips as well. So a lot of these ideas we have built into the portfolio right now. And some of the things you see on the right is a combination of companies, for example, like Johnson & Johnson, which is just not growing, Eli Lilly, who've had disappointing pipeline. And at the same time, we have other places like Tesla, where they've rallied like 122% this year, so that's way too expensive for us. We've actually sold them off. And places like, for example, Broadcom, again, there's a little question mark around the sustainability of that company, so we're bringing that number down as well. And finally, on the last page, on 23, there's been a big shift, obviously, in the last 18 months in the markets, right? Number one of that being the level of interest rates, the outlook for the economy. It's becoming much more uncertain how the world's going to look. A lot of companies are not investing as much anymore. And for you to borrow money or to issue new bonds or issue new equity is very, very expensive, right? So companies that are like bond proxies, very slow, very stubborn, not a lot of margins, have a lot of difficulty at the moment right now. Whereas ultra high growth companies are actually being rewarded in this cycle, because don't forget, if you are in America, you can go out, buy government bonds, you get 5%, right? If you were to buy stock right now, that number, that growth rate needs to be much higher than 5% to attract those investment dollars. So you look at the growth rate of the companies in our portfolio at 13%, much higher than the index. And at the same time, with interest rates being so high, companies with a lot of debt will start to default as we get into the recession next year or the slowdown next year. If you look at our portfolio in that purple bar there, we have much lower leverage than most companies in the index. So I'll stop there and maybe just leave on page 24. It's a difficult world, but again, having a broader set, having a global mindset to navigate all these opportunities is going to be key. These themes that we've listed on the page, they are here to stay, they're irreversible, they are long-term, and they are broad. It allows us the room to maneuver as well. And finally, keeping an idea around sustainable investing is really going to be key, and sustainability really feeds through the entire process and is in every single stock that we research. So Diaz, that's me. I'll pass it back to you. Thank you very much.
All right, thank you so much, Anis, for the materials that you have shared with us today. Untuk Bapak Ibu yang mungkin ingin bertanya, bisa melalui tab Q&A ya, Bapak Ibu ya, maupun tab chat yang ada di di bawah screen-nya Bapak Ibu. Itu bisa melalui Q&A maupun chat. Nanti saya coba untuk menyampaikan pertanyaan tersebut ke Pak Anis. Sambil menunggu Bapak Ibu yang ingin bertanya pada pagi hari ini, maybe I'd like to ask a couple of questions first while we're waiting on the clients to have questions. So we're just wondering, what are the important parameters for searching growth in China? Because you have mentioned earlier that we were expecting that China would have a significant growth in 2022 and also in 2023, but they're actually lagging behind compared to other countries. So what are the important parameters for us to search for growth in China?
I have a great story, which hopefully will underline the issue going on with China right now. So I had met with our chief investment officer for our asset management company in China. And when I walked into the room, his office, he basically said, you see that sofa in the corner there? That's where I slept for 2 months when China was doing COVID-0, right? That just tells you the mentality of people right now. China's been officially open for the past 6-7 months. Consumption spending is very, very weak. Areas where Chinese consumers do spend on sort of lower ticket items being very, very conservative. The issue with the situation in China right now is not about any numbers, not about any sort of factor, it's confidence. Because don't forget, they had a much tougher time with COVID-0 than all of us had around anywhere in the world. So there is a psychological damage that needs to be repaired. That takes time. There's a confidence issue that needs to be repaired, and that takes time. There are some things that the government can do in China, which is obviously to have much more positive signaling effects. And they are doing those things. But the numbers coming out of China is not great. Real estate is obviously a big issue. You guys have seen that in the news over the last several days as well. So there's a lot of things hitting confidence in China really, really hard. And borrowing the words from my China CIO, patience. I think we just need patience for the Chinese consumer to come back. We need patience for confidence to be restored, right? There's no doubt that China is a massive growth engine in the world, right? We cannot not have China in our portfolios. There are different ways of playing China. So for example, the way we did it this year It's because obviously we were quite concerned about picture in China this year, and obviously over the last couple of years we've seen a lot of regulatory issues coming out of China with all the crackdowns on technology and education stocks. So the way we invested in China this year was through Europe, actually. A lot of people don't know this, but European companies have a huge exposure to China, right? 25% of revenues from European companies come from China, specifically one country, right? The same to the US, by the way. So European companies make as much money in China as they do in the US. So we can get China exposure through European companies without having to go into China right now. LVMH was a great example of how we did that this year, right? So China will take time. I think there's no one number that I can give, unfortunately, right? A lot of it has to do with the sentiment that the government needs to rebuild. And the key here is we acknowledge that we've seen that the government has acknowledged that this is a key priority, right? They have clamped down, unfortunately, way too hard over the last couple of years. They recognize that everything is quite slow, and they are working towards building back that sentiment. But the thing I want to manage everybody's expectations is, you will see small stimulus from China, right? Small ones here, small ones here, small ones here, small ones here. In total, they'll add to something rather substantial, but this will take time. What you will not see is one big bang stimulus, because they don't want the real estate market to expand crazy again. They spent, how long has it been now? Almost 9 years, since 2015, to de-lever the real estate market. The last thing they want to do is unwind all of that. So one of the things to bear in mind is that there's a lot. It's a very long answer. I'm sorry for that, Diaz, but China is a very big question for a lot of investors, and I'm hoping to try to give us a very comprehensive view. So China's issue is confidence. The government can do a lot just purely by signaling, ensuring more cooperation, telling people outright what their priorities are, which they're trying to do. And there's also this last element, also the real estate piece, which is for a lot of Chinese, real estate is their single largest investment, right? And the value of their home has just broken the floor, right? So that needs to come back. Real estate needs to stabilize, coupled with all the government small stimulus that they do, all the signaling effects. That should then hopefully feed back into confidence. That should bring back consumption and spending.
I see. So would you say that we're expecting sort of like more stimulus from the government, or the government in China, or?
We're expecting a lot of small stimulus from China.
I see. Okay.
Yeah.
Okay, that's interesting. So all we need to do is to be patient with China, right?
Yeah. It's trust me, it's very frustrating. We feel it too. I mean, we are the largest China equity manager offshore, right? Like we feel it. Like a lot of our clients who've been putting money in China are not necessarily the happiest. Because as you guys saw in that chart I showed you earlier, everything ran up this year except China, right? So that's been a huge source of frustration for a lot of people. But the key is, don't forget that all the structural themes, the reasons why you want to be in China, nothing's changed. It's just that mobilization, right? And confidence is the hardest thing to fix.
Yeah, that's good. Okay, Bapak Ibu, mungkin saya remind kembali ya, kalau ada pertanyaan monggo melalui tab Q&A maupun juga tab chat. Nanti saya akan sampaikan ke Pak Anis. Maybe while waiting on the questions from the clients as well. So I have a second questions for you, Anis. So what are your thoughts on the higher expected U.S. inflation that just came out a couple of days ago? It was 3.2, where the market was expecting 3% inflation. Would that kind of shift the view of the market as well, or what are your thoughts on that?
Yeah, I mean, the thing is, inflation, I would say don't be surprised if the number bounces around at this point, because the big things have already been done, right? Energy's already come down, housing's already sort of like moderated to a certain level. A lot of the big ticket sort of like non-core inflation has already come down. So what we need right now is that jobs piece, right? So I would say don't be surprised for the next 2-3 quarters to see that inflation number bounce a little bit. We think this year should end at about 3 to 3.5. We don't give an exact number because we need to give a range at this point, right? But I think the trend going into next year is very, very clear, right? So what's happened, for example, if you look at sort of the US regional banks, is that served as a 1 to 2 rate hike already, right? Because what that basically did is basically killed loan growth, to put it mildly. Now, we're part of the largest bank in the world, right? And even for JP Morgan Chase, I can tell you that we are basically preparing for a lot of new regulation coming down the line, because nobody ever wants US banks to go bankrupt again in the US, right? So there's going to be a lot of regulations coming, which means from our side, we prepare a lot of money, a lot of provisions, and to make sure that we can sort of address that when it does come. So what does that also mean? That basically means that we're not going to be taking on a substantial amount of risk at the moment, because if you're going to lend money to somebody right now, you need to make sure that they're not going to default. And the problem with defaults is that they don't happen before a recession, they happen during a recession, right? So, and we don't know when that's going to happen. Best guess, probably end of first quarter, early second quarter next year. That's if we had to put a number on it, right? But again, recession this time won't be like bad and evil. It'll just be like something slow down and we'll slowly grind back up. So for us to address inflation right now, we need the wages number to go down, right? And that unfortunately at this point is very, very hard to see, because structurally there's just so many jobs available out there. The key, if I had to give you one indicator to watch, right, is really going to be wage growth. Because once we see wage growth turn, that basically will tell us that basically we've hit equilibrium in terms of jobs people want versus jobs that are available, right? So once we hit that number, wage growth will start to turn, and eventually unemployment will start to rise, and then we'll see broader economic slowdown. But as of right now, we're already starting to see some things falling through the cracks. One of the indicators I like to use is actually look at the breakdown of consumer spending. So people who go shopping at Macy's or Bloomingdale's or like these high-end brand name department stores in the US, right? That number has actually been shrinking. And the number of people shopping at like TJ Maxx, for example, like discount stores, like brand name, but like discount stores, that number has actually been increasing as well, slowly. So overall, so that's why you have to look at you have to look into the data. So the overall consumption number looks like the same. It looks like everyone's spending a lot of money, but what they're spending the money on is shifting a little bit as well. Yeah. So it's slowly happening. We just need to be a little bit mindful, and we have to have a look at that wage growth number. I think that's going to be the key. That's going to be key.
I see. That's quite interesting. So we have one questions from one of our clients. So the questions is, how likely does the U.S. government will issue new bonds again in order to fight for inflations? And would the global economy outlook be brighter in 2024? And how is the implication might have for the Indonesian, or I would say Asia in general?
Okay. So, I mean, the US issues bonds all the time, so they'll continue to issue bonds non-stop. I think maybe the question might be around sort of QE and things. So we don't expect additional rounds of QE, right? I think what we've seen very, very clearly over the last 18 months is that the Fed has actually been trying aggressively to bring down their balance sheet, right? Because they know at some point a recession will come in the future and they have to do QE again, because QE is part of the standard offering of central bank policy right now. So what we actually expect is we will continue to see QT, quantitative tightening, which is behind, by the way, been happening completely behind the background. Nobody's been talking about it, right? And that's the big, if you had to ask me what is the biggest, scariest thing that nobody's talking about, it's QT, right? That's been happening behind the scenes, and we expect it to continue happening going into 2024. So our outlook for 2023 is actually of moderate growth in the US. We expect it to grow at around trend, but next year that will come down. So we actually expect US GDP growth to grow not at negative, but below long-term average. So if long-term average is 2 to 2.5, right, we expect it to grow to around sort of like 0.5 to 1, right? Not negative though, but even at 0 to 1%, there will be some companies that will not do well at all, and there'll be some companies that do well, right? Now in Europe, that's a much trickier situation, because Europe, you can argue some countries like Germany are, for example, already in recession, right? So Europe is definitely heading into a recession so much sooner than the US. Now, the good news with Europe is that for the first time in a very, very long time, one of the definite positives of this whole Russia-Ukraine situation is that the European Union has proven that they can work together, right? And the big takeaway, obviously, when you look at what happened with the UK and Brexit, is that there is so much more incentive being in the European Union than being outside of the European Union. And with Russia basically right at their doorstep, they need to stick together. So all these investment, all this infrastructure plan, all these things are going to happen, right? And I think for Europe, that's going to be the key that drives them out of this recession. And sorry, I missed the third question that you had.
It's more towards the implication of what would the U.S. do, and the implication for us here in Indonesia or the part of Asia. Yeah.
Okay, so what would the U.S. do? Now, the U.S. will probably hold interest rates for as long as they possibly can, right? The problem with high inflation is that it's very sticky, right? Like we're seeing right now, it's very, very hard to bring that number down. And if you don't bring that number down, I don't have to explain to everybody what high inflation means. We've all lived through it, right? My rent just went up by 40%. Like inflation is not good, right? So what people need to understand is that if you don't kill inflation definitively, it will stay high, and it'll be even harder to kill it next time, right? So they've already raised interest rates by almost 5.5% since the beginning of last year. That's huge. And inflation is still not dead, right? If they don't do it this time around, who knows how much they're going to have to increase it again by the future. And what that basically means is right now, for example, if you were Ford in the US, right? Ford Motor Company, the guys who make cars, right? If today they went to the market to issue new bonds for Ford, their cost would be more than 9%. If interest rates go up even further than here, then what? First of all, they can't even borrow at 9%. Are you going to tell me they're going to borrow at 14, 15%? So what the Fed is going to do is they are on purpose trying to slow down the economy, right? This is what the Fed wants. And if it goes into a recession, so be it. Killing inflation is the number one priority. So don't be surprised if the Fed will hold and hold and hold. Maybe they'll hike again, right? It's definitely not impossible. But the Federal Reserve's priority is number one, kill inflation. Then number two, make sure full employment. They don't have to worry about, the employment's already full. So kill inflation, right? They don't have, it is not part of the Fed's mandate to guarantee economic success or GDP growth. That's not part of the role. The role is price stability and employment. These are the two things the Fed cares about. One of them is already gone. All you have is to kill inflation. Okay, what does it mean for Asia? Now, US is a massive export market. China is a massive export market. The key difference here is that China buys Chinese goods, and China has a nice closed ecosystem, right? Whereas the US buys imported goods for now. They might change that down the line. But the problem is, because we're going into this economic slowdown, the amount of exports that we're going to be able to send to places like US, to Europe, other parts of the world, is not great. You look at the export numbers this year, it tells you the same story from ASEAN. Exports are coming down, right? The benefit for ASEAN is that consumption has been much stronger than expected. Now, consumption has been strong, employment has been strong. The problem is, it's a little bit too strong. So on one hand, it's offsetting all the negative stuff from exports. But on the other hand, because consumption is so strong, I'm starting to hear that central banks in Asia, ASEAN, are thinking that inflation might be coming. And again, what do central banks hate? They hate inflation. So it could be, and again, we need to see the numbers, but if consumption is very, very strong, inflation comes up, central banks will have to increase interest rates, right? And that's going to slow the economy. But that's more of a 2024 situation, and I hope it doesn't happen, but we need to keep an eye out for that. That's the biggest risk for us in our region. Yeah.
I see. Thanks so much, Anis. There's one more question, but I do believe that I can answer the next question. So the question is, apakah JP Morgan bisa membantu dalam servis tersebut gitu ya, Bapak Ibu. Jadi jika Bapak Ibu ingin melakukan investasi di pasar Amerika Serikat, apakah JP Morgan bisa membantu dalam jasa atau servis tersebut? Nah, mungkin saya bisa sampaikan juga bahwa JP Morgan Asset Management ini merupakan technical advisor dari Mandiri Investasi, Bapak Ibu, di mana salah satu produk kami yang namanya Mandiri Global Syariah Equity Dollar atau yang biasa disebut dengan MGZ ya. Ini menggunakan technical advisor dari JP Morgan. Jadi tadi yang disampaikan oleh Pak Anies itu kami mimicking atau kami menirunya di produk tersebut. Gitu. Jadi Bapak Ibu bisa berinvestasi ke Amerika Serikat melalui produk kami yang namanya Mandiri Global Syariah Equity Dollar atau MGZ. Mungkin itu saja karena sudah jam 11 lewat ya Bapak Ibu ya. Any last words from you, Anies?
No, it's just all good from me. I think just one of the things I'll just highlight is that 2023 has been a year that not a lot of people expect. Like we all had certain expectations coming into this year, but obviously the market did not like move in the way that a lot of us expected. In a positive way, I would say, because for a lot of investors who had exposure to global opportunities, who had diversified away from single country funds, for example, markets did quite well for everybody this year. I think most strategies are up by double digits this year at the very least, right? So I think it's been quite a positive year for a lot of investors. The key here is to not look at what has done well already, because you're basically locking in past returns. That's not what you're going to get in the future. I think making sure that you understand that what's happened this year is driven by specific factors, and especially the rally that's happened this year has been so narrow in only 7 names. Right? What happened to the rest of the 400 plus stocks in the S&P 500, for example? Right? Europe has outperformed the US equity market by the last 3 years, which nobody actually even talked about, for example. And now Japan, long term, this is a great story, right? Just need to be a little bit careful about how we position around that. So going to the details, going stock by stock is going to be key.
All right, thank you so much, Anies, for the presentation for today. Mungkin itu saja Bapak Ibu dari kami karena sudah jam 11 lewat 10 ya sekarang ya. Terima kasih sekali lagi kepada Bapak Ibu yang sudah menghadiri event hari ini. Mungkin selanjutnya saya kembalikan ke Ibu Astari. Terima kasih.
Oke, terima kasih Mas Diaz dan juga Pak Anies atas paparannya dan insight-nya juga, dan terima kasih pada nasabah Bank Mandiri serta teman-teman dari RM juga yang udah menyampaikan pertanyaannya. Baik, sebelum saya tutup, Wealth Management Group akan kembali mengadakan berbagai acara Wealth Talk pada bulan depan. Nantikan informasi terupdate seputar investasi dan juga market. Akhir kata, saya Astari Adityawati pamit undur diri. Terima kasih banyak kepada narasumber serta para nasabah yang hadir. Sampai bertemu kembali di acara Wealth Management Group Bank Mandiri berikutnya. Assalamualaikum warahmatullahi wabarakatuh. Selamat siang.
Tutorial registrasi reksadana pakai Livin sambil leha-leha. Pertama, buka aplikasi Livin by Mandiri. Klik ikon Livin Investasi. Klik banner daftar sekarang juga ya. Karena kamu belum punya rekeningnya, klik lagi, buka rekening investasi. Baca syarat dan ketentuan sebelum klik setuju, lengkapi dan verifikasi data diri kamu, isi risk profile questionnaire dengan jawaban yang kamu banget deh pokoknya. Pilih rekening sumber dana yang akan digunakan buat bertransaksi. Cek lagi data yang udah diisi. Sebelum lanjut, ganti posisi dulu, biar makin PW. Masukkan PIN, cukup pakai jempol. Dan tada! Registrasi selesai dan akan segera diproses. Lanjutin aja leha-lehanya. Ini era baru investasi. Live in investasi. Do it smart, do it now.